Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, June the 17th. Well, it was another down week for the markets, with canola and soybean oil leading the way lower. Wheat and soybeans finished the week lower as well, with wheat giving up most of their losses today on profit-taking ahead of a 3-day long weekend in the U.S. Corn was the only positive player, finishing the week higher with some positive export sales. The U.S. Fed raised their benchmark interest rate by 0.75 percentage point on Wednesday, which saw the stock market sell off as fears of a recession grows. Well, with the grain companies switching their new crop to the new crop futures for their spot pricing, we'll also make the switch and focus on these months in this report. The November canola contract this week was down $43.90 a ton, and it closed out at $1,000.30. The canola was down this week with rains across the prairies, improving the crop conditions, and on lower world vegetable oil markets. The November soybean contract was down as well this week. It was down 30 cents a bushel, and it closed at $15.38. Bucking the trend was corn. It was up this week. It gained 10 cents a bushel and closed out at $7.31. The wheats were all down this week, however, with the Chicago December contract being down 37 cents at $10.61 a bushel. The December Kansas wheat contract was down 55 cents and closed at $11.22 a bushel. And our December Minneapolis spring wheat contract lost 44 cents for the week and closed at $11.76. The wheat was down on the progressing U.S. winter wheat harvest in the southern U.S. plains and on the improving weather for the northern U.S. states. The U.S. wheat export sales have been limited by a higher U.S. dollar, which also weighed on prices. Our Canadian dollar this week, it took a hit. It's down 161 basis points, and it closed at 76.74. And pushing it down hard this week, crude oil, the August contract lost $10.06 a barrel for the week and closed at 108.06. For next week, well, there is a lot of heat forecasted for this weekend in the U.S. and parts of the Canadian prairies, which could become a factor if it materializes and decides to stick around into July. But until then, we're going to look for canola to continue to be under pressure. The November contract has pulled back to that $1,000 a ton area, and we're going to look for prices to try and chop around at this level until more is known about this heat. Now, the moisture levels are decent right now, and so heat actually would be welcome, unless, of course, it persists. For wheat, well, with harvest rolling along at a fast pace, the easiest path really is down. Spring wheat has now slipped below that $12 area, which does open the door to go down to $11.50. And unless there is a shift in the weather, the pressure is on to the downside. I'm Ed Baldwin with your weekly wrap-up for Friday, June the 17th.